I'd like to introduce you to our speaker, who is Alexis Garatti, who's the Senior Climate Change Manager, Sustainability Office at A&RF Forum. Alex has worked as a Climate Change Manager in the Sustainability Office since 2021. He was previously Head of Economic Research, focusing on ESG structural policies in the US economy. He holds a PhD in macroeconomics with a focus on macroeconomic shocks and monetary unions, and the IFD certificate of the ICMA. Someone who's actually studied something which actually might have some value to them in their career. It doesn't happen very often. Anyway, could I welcome to the stage, please, Alexis? You had me worried for a moment there, Alexis.
Thank you. Thank you very much for introducing me.
Yes.
That's my pleasure to be here today. So I'm the ESG guy. I found that the discussion of the previous panel was interesting because there was a kind of debate around the change of the nature in the credit risk. And there was this side thinking that there is no change really in the nature of the credit risk, and the other side thinking that there is a fundamental change in the nature of the credit risk. I am on this side. I really think that ESG perspective and global warming are very important factors to factor in when investing and when evolving in the environment of trade credit insurance industry. So this is what I will try to demonstrate, but by just showing what we do every day in the sustainability office. You will understand that the way we analyze risk has fundamentally changed as a trade credit insurer. It means that the credit, the monetary and financing condition that we supply, that we offer to our clients, will change very significantly in the coming months and in the coming years. So that's why, for me, credit risk has significantly changed in its nature. So sustainability strategy, ESG policy, and political risk. Why this insistence on the political factor? Because what we realize is that there is a very strong political pressure on asset manager, on insurer, to implement ESG strategy in their investment policy and their insurance strategy. So why sustainability matters? Because you see that pressure at different levels of the society. Risk are growing. Operational risk related to global warming. Investment is more risky because in the change in the nature of the analysis that you do of correlation analysis, for example. When we look at a simple Gaussian distribution of risk, and when you realize that there is today a multiplication of extreme events, it means that the distribution in the statistical properties of your portfolio will change significantly in the coming years, in the coming months. It means that the nature of credit risk has changed significantly, fundamentally. Legal and political, the political factor. Yesterday or the day before, the French government announced that they will definitely buy 100% of EDF, the French energy producer. The same in Germany, with the nationalization of a few important corporates, important companies in the energy sector. So with this multiplication of extreme events, such as the Russian crisis, such as the COVID crisis, you can now expect a much more important intervention level of the government. So that's why political risk is now to be factored in a much larger extent compared with even 5 years before. Reputational risk. What I'm doing every day is to look at the day-to-day evolution of the reputation of our most important clients in our portfolio of clients. So reputational risk is very, very important now. This is not only defensive, there are also opportunities, and this is what we observe in also the composition of our portfolio of clients. We observe a transition away from the traditional energy sectors towards a new type of sector, for example, related to renewable energy. And that's why we understand that there will be definitely losers in this transition away from a traditional source of of energy. Stakeholders' expectations are changing a lot. Clients, investors, employees. Now the pressure, the expectation in terms of sustainability of your policy is much higher. And now if you want to hire the young generation of workers, you cannot expect only to maximize your profit. You need to attach social perspective to your policy and the organization of your company. This is very important, and that's why we are investing also at this level. And of course, regulation. In less than 2 years, we need to be ready as a trade credit insurer. We need to be ready in respect of our net zero strategy. Less than 2 years. So it means what? That me, as a sustainability office member, I need to be capable of measuring the carbon footprint of my portfolio of clients. And I need to be able to build a net zero trajectories for a progressive decline of our carbon footprints. It means I need to be able to measure my own carbon footprints, and I need to be able to measure the carbon footprint of all my clients. And in less than 2 years, I need to tell the regulator that I will follow this trajectory of progressive reduction in our carbon footprint. So it means that in terms of innovation, research, we need to invest a lot. And it means that this is very serious. When I say that we will transition away from the traditional energy sectors, this is a reality. And energy is the first sector, but coming in the following months, pretty soon, new regulation will concern chemical, transportation, and transportation, construction, and chemical. So you can expect also the wave of regulation, new regulation that we have seen in the energy sector, to be multiplied as well in the construction, transportation, and chemical industry. So it means that the essential of our exposure as a trade credit insurer will fundamentally change in the coming years. It means that credit risk analysis will change radically. Monetary and financial condition of the traditional energy sector, for example, will tighten significantly. And I'm convinced about that. And when you look at the fundamental nature of the last crisis that we experienced, for example, the COVID crisis, this is related to global warming, because this is at the origin, the proximity of human people with wild forms of life, which explains, which is the trigger of the COVID crisis. When you think about the origin of the Russian crisis, you could think that this is above all geopolitical. But you also could think that maybe that if Putin was in a kind of rush to initiate this conflict, this is maybe because he expected that the traditional model of trade at a global level would change significantly in the coming years. Because a few years before, what did the Occidental power announce? They announced that they will transition away from traditional source of energy. It means that the overall model of growth of the Russia is outdated now. That's why there was this necessity, the rush for the President Putin to organize this conflict, because this is still time to benefit from high oil price and initiate this major conflict. Because in 5 years, this is too late. Because we won't need anymore importing so much energy from Russia. So that's why this is so important. Sustainability as a regulatory tsunami. So you can see here the different trajectory, the different initiative from the European Commission, EIOPA, so the regulator managing the regulation for the insurance industry. And you can see also initiative coming from the NBB, which is the regulator for trade, for alliance trade. And we have to absorb all those new regulation. In particular, like I said before, we need to be ready in less than 2 years in building our net zero strategy. So this is very important. So in terms of identity of a company, when you are working in the environment of sustainability, you face several types of dimensions in your strategy. SDG, CSR, ESG. We need to understand what articulates, what links these different dimensions of the sustainability policy. SDG, Sustainable Development Goals, 17 goals expressed by the United Nations. Alliance officially signed those agreements and those ambitions. It means that you identify among a list of public goods, such as reduction of the poverty and others, you identify the public goods for which you will invest a lot in the coming years. Allianz has identified clearly 3 major public goods at a global level in which it will in particular invest in. It means that we, Allianz Trade, as a member of Allianz Group, we need to follow those recommendations. Once you have identified those public goods at a global level, you need to understand what kind of role you want to play compared with those public goods. This is the corporate social responsibility. As an economic actor, you don't have to maximize profit anymore only, but you have also to reach those goals, those public goods, and the way you build your corporate social responsibility, it means that you position yourself into the society, not only as an entity which will maximize the profits, but as an entity which follows development goals. And so this is very important to understand who you are as a corporate social responsibility in the context of corporate social responsibility. And ESG, those are the KPI that you will follow in relation with the corporate social responsibility. So all those elements are key functions of the sustainability of Allianz Trade today. You have here the 17 sustainable development goals. And I have circled in red the one that we were already following before even the signature of those goals by the Allianz Group. And so you can see that those goals, no poverty, decent work of economic growth, industry innovation, peace, justice, and strong institution, partnership for the goal, public-private partnership, all those goals which naturally private entities follow by just maximizing the profit and contributing to foreign external trade. So this is already what we did before. But now Allianz has switched to new goals, and you have climate action, number 13, which has been identified as a priority. And you have the number 17 and the number 8. So really a private orientation of our goal in terms of public goods, but also this insistence that Allianz wants to play a role in terms of public-private partnership at a global level, because it contributes to the reduction of poverty, the development of trade, and the promotion of democracy. You have the natural link between those goals and political risk on the right. Research have been proving that the development of trade, for example, is positively correlated to the promotion of democracy historically, but not for all the countries. There are also countries, especially developed countries, rich in capital, for which the development of trade is inversely correlated to democracy, meaning that the rise of inequalities because of the promotion of trade makes populism rise, and therefore creates to promote a kind of political instability. So public goods and political risk are intimately related. So that's why we need to understand that kind of element. So you have here the development, the description of what we aim at reaching as a group and as a member of Allianz Group. Detail of the sustainability policy of Allianz. What I want to insist on at this level is that we work on the basis of measurable. So in terms of environment, measurable, this is easy. This is building this net zero strategy, meaning having a direct and clear understanding of what is our carbon footprint. This is for the E. For the S, this is the social policy of Allianz and Allianz Trade. Even for that, you have measurable. More and more, we are incited to promote internal surveys, external surveys also with our clients and with investors with which we negotiate, to know what is the degree of satisfaction of those different stakeholders in respect of our social policy. So you have also measurable for the S, and the regulator is asking clearly to be rich and transparent at this level. So it means that your social policy, even internally and externally, will be scrutinized in the future. And so this is a strong point on which Oliver Bäte insists on First, we need to be strong in terms of the S and in terms of the G before envisaging to be more ambitious at the level of the E. So measurable is the key word. We really don't speak in empty words. We measure the efficacy and the impact that we have in terms of environment policy and in terms of social policy. And the governance correspond to those ambitions, of course. In terms of transformation of the economy, I said that public-private partnership is the key word for Allianz and for Allianz Trade. We have already, like I said before, a significant transition in the composition of our infrastructure projects. Besides the trade credit insurance industry, we are also contributing to the financing of long-term projects, in particular in infrastructure projects. And so we are both insuring those projects and also investing into this project. And already in the composition of the portfolio of the infrastructure project that we have, there is a significant shift of the renewable part to the detriment of the traditional part of energy infrastructure project. So this is impressive to see the percentage of renewable projects in the portfolio of our infrastructure project. The share of those renewables is increasing from less than 10% to more than 30% already. So this is something which is, as a member of the Allianz Group, something impressive to see. And it shows the reality of what I would call globally a progressive drying up of source of financing for the traditional actor of the energy sector. So that's why a credit risk, in my view, this is obvious, will significantly deteriorate for that kind of traditional actors. The transparency and ratings related to the sustainability policy are key. As a member of Allianz Group, we have excellent performance, but Allianz Trade, we were integrating this group lately, so we need to progress very rapidly in terms of efficacy and performance for those different ratings, estimating the performance of our ESG policy. You need, for example, to make your net zero policy credible. You need to be analyzed, you need to be validated, certified by independent institution, telling the regulator that your net zero strategy is credible and based on solid foundation. This is very difficult to obtain that kind of certification. So that's why the level of pressure is so important. Here you have the composition of the ambition in terms of the E, the S, and the G in function of the different line of business in Allianz Group, investment, underwriting, and asset management. This is so-called materiality analysis. This is a matrix of what are our ambition and what is the impact that we expect at the level of those different ambitions. This materiality analysis is something that we look specifically because the nature of our business in terms of trade credit insurer is different compared with the overall organization of Allianz Group. So this is something that we need to understand also intimately. So Allianz Trade, what are the specifics of Allianz Trade? Allianz Trade, as you know, is the global leader for trade credit insurance industry. So this is very important to analyze the risk evolution in respect of global warming compared to the nature of our business. So we are contributing significantly to the evolution of monetary and financial condition to which our clients are exposed to. And this is something that we need to really take into account when we build our climate policy, because we need to be aware of those impacts that we have on monetary and financial condition of our client. When we decide to stop insuring a specific company, then there is a signal effect for the rest of the market telling that it will be very difficult for this company in the future to access traditional source of financing. And when we publicly say that we will disinvest, that we will be less inclined to insure, for example, traditional actors of the energy sector, this is a strong signal effect. It means that it has already an impact for the rest of the market, telling, by the way, if Allianz and Allianz Trade are providing that kind of public commitment in terms of exposure to the energy sector, it means that for this sector, it will be really tricky to access the traditional source of financing. So this is something that we need to take into account when we build our net zero strategy. Yeah, that's why we used to say that we will accompany those kind of sector, the most exposed to the pressure of the regulator, to incite them in advance to transition away from their traditional model of growth. In terms of strategy, those are the different ESG targets that we have. You can see that there are operational targets, the necessity to build on our net zero strategy, and also other elements. I see that I have only 2 minutes, so I try to accelerate. The governance framework, governance brings you credibility. So the credibility is visible in our organization at the level of the participation of board members to the policy, to the sustainability policy. We have created an ESG committee, and we have created the so-called sustainability office. The active contribution of board members to this committee is a key element of our credibility in terms of sustainability policy. In terms of operation, we have a clear target of reducing of carbon footprints by 30% at the horizon of 2025. This is something comparable for Allianz as an asset manager to reduce by 25% its exposure, its carbon footprint related to its investment at the horizon of 2025. But we have different elements of operational targets. Very important because it means that you need to have a system of information internally in order to measure exactly what is your carbon footprint at scope 1, scope 2, and scope 3 level. Maybe the most important slide for this presentation, that's why maybe I will take this one to conclude the overall presentation. The nature of the risk, the evolution in the nature of the risk related to climate risk. You can see that there is 2 different levels, the physical risk and the transition risk. Physical risk, this is thanks or because of the multiplication of extreme events, you have a significant increase in the probability of occurrence of extreme events. So in that case, this is something that you need to take into account in your strategy and the understanding of your credit risk. For a trade credit insurer, maybe this is not as fundamental because we are not P&C type of business. We are a trade credit insurer. What is more important for us is the transition risk. The transition risk asks the following question. Will your clients be able to transition away from a traditional model of growth? Are they ready to implement a credible net zero strategy? Because the regulator will ask them to have a credible net zero strategy. It means with this transition risk that we are likely to face a wave of default in certain sectors which won't be ready to have a credible net zero strategy. This is what we call the phenomenon of stranded assets. The stranded assets phenomenon, what is it? This is the fact that because you are not really ready to correspond or to answer to the request of the regulator, suddenly the value of your asset depreciates significantly. So the probability of risk, the probability of default today is not depending on your commercial performance, or your traditional commercial performance, depending on the evolution of the economic cycle. There is now a fundamental element of risk related to the value of your assets. You could, as a company, because you are not ready to respond to the requirement of the regulator, you are likely for certain sectors to experience a sudden depreciation in the value of your assets. And this is a major new element in the understanding of the credit risk. Stranded assets, transition risk, climate risk, these are the major reasons why the credit risk nature has fundamentally changed, and this is what we monitor. We monitor this element via. That's a pity that I don't have the time to comment this slide, but it is just to show that we could think that a simple increase in the average level of temperature is not as important as that to understand the evolution of risk. But when you look at a simple Gaussian distribution, on the right hand you see the rise in the probability of extreme event. You understand that all the traditional strategy that we have in terms of diversification of our portfolio will change fundamentally. So the analysis that we traditionally do in terms of diversification of risk, they are not valid anymore because the multiplication of those extreme events and because of the tail risk. The probability of occurrence of a tail risk now in the context of global warming has significantly increased. It means that we need to rethink fundamentally all the elements of our portfolio analysis in terms of diversification of risk. Maybe we could speak about that later. We try to integrate ESG factor into our sector risk analysis. We have already done the integration of ESG factor in the analysis of the country risk analysis, but we are doing that in the sector risk analysis. Those are the different initiatives that we have taken in terms of oil and gas industry, the historical evolution of our restriction that we have already implemented in terms of insuring company or not in the energy sector, so showing that this is a reality. The decomposition of the different elements, upstream, downstream, midstream, what kind of business we are already penalizing because of their exposure to new restriction. And at last, some elements related to the evolution of our referral activity, reputation risk, where this word has been mentioned before. This is the statistics that we are providing in terms of the referral that we have. When a commercial underwriter has a doubt about the sustainability policy of a certain company, and he compares what he knows about this company with the internal rules that we have now established in terms of sustainability policy, he sends this referral to us. And our function is also to say yes or no, we do the deal. And so you can see that there is a kind of multiplication of referral because the number of rules is increasing at a very rapid pace. So this is not greenwashing, this is a reality. Credit risk has already evolved, credit conditions are already tightened for a certain number of actors, especially in the oil and gas industry. So that's why we need to be prudent. And that's why, again, and this is my conclusion, the nature of credit risk has fundamentally changed. I'm convinced about that. Stranded assets will multiply in the future. Thanks.
Questions? So, I just want to give you time for questions. That's why I was trying to hurry you along.
Lionel Taylor, Trade Advisory Network. I mean, that was really, really interesting. But just moving away from Alliance for the moment, because you mentioned about EU regulation and the growing regulations. So I just want to ask, because you're much more knowledgeable than I am, in terms of what that means for corporates who are either in the EU or their supply chains cut across the EU. How is this all going to sort of pan out for them in terms of their reporting? And then, I mean, I think you mentioned something about your reporting to the regulators as an insurer. What about the reporting of the banks who fund those corporates? How is that going to be changing through this regulation? For the bank, I think that this is the same. They are as mature and even more mature than us, trade credit insurer, in terms of credit condition that they offer to their clients. We jointly invest or we participate to global deal of infrastructure, for example, and as an insurer or as an investor. And so we are part of very complex deals related to infrastructure projects. And what we do realize is that the requirements that they have for judging about the sustainability or not of infrastructure project
is very, very demanding, very impressive. For example, I remember a recent deal. It was like a wind farm in the northeast of the UK. And actually, the deal, which is fundamentally green in its nature, was almost refused on the back that there was no clear recycling strategy in this project. And the site fatigue process, meaning this site was already old and was requiring a further investment. This new deal, envisaging to fund an extension of this site, was almost refused, despite its green nature, because the recycling and the site fatigue aspect was a key obstacle to the financing of this element. There was some discussion, etc., but every time that we jointly participate to such complex deal of infrastructure projects, I can see that banks are very also demanding in terms of insurance that the issuer of debt can bring in terms of green nature of the project. For the first element of your question, I do observe a fundamental difference between large corporate and SMEs. And so because SMEs are not mature enough to provide quality and transparent information in terms of sustainability of their policy, for now the pressure will be on the largest companies. And so there will be, I would say, maybe a net separation between SMEs and large companies. For now, SMEs, but even in the universe of SMEs, you have a different size of companies. But the regulator will fix the level from which you will be requiring clear information. And so the smallest company, they will be safe in the very short term. And the largest company, the pressure will be very direct and happen very soon, actually. Even if the European Commission is not asking the real side of the economy to provide clear and transparent or exhaustive system of information in their sustainability policy, indirectly, those large companies, they will face tightening monetary condition, financing condition, because of us, because of banks, and because of trade credit insurer. Because actually, I can tell you that we have already a list for large companies which are clearly in the target of our policy, and to which we have some recommendation. At the horizon of 2025, there are a certain number of large companies. If they are not capable of providing a clear net zero strategy before 2025, we have already committed to stop providing insurance to those companies as soon as early as 2025. For me, that kind of statement, public statement, it means that this is a fundamental tightening of monetary and financial condition for those kind of companies.
Thank you, Alexis. I'm sorry we haven't got time for more questions. If there was going to be a question that I would have wanted to ask, you asked it anyway, about the sort of the differences between the large and mid-corporates and SMEs. Thank you for that. Hopefully you'll be around at the bar afterwards so people can talk to you
Sure.
then
No
as
worries.
well. Thank you very much.
Yeah, welcome.